Hi everyone, welcome to this live coverage. As you know, I spend a few minutes every Tuesday to share with you my views of the market, both fundamental and technical. So let's start today once again, by sharing the calendar, right? There's a couple of things to say ahead of the review of the upcoming data. One of it is that U.S. officers yesterday, I believe it was Lockhart and Williams, open door in different statements and in different events to a rate hike in the use in the upcoming April Fed meeting, even despite the meeting has not a press conference or economic forecast schedule, right? I do believe that they are trying to somehow diminish the effects of a dovish Fed, the effects of a dovish Fed we have seen late last week. Anyway, the fact is that the economic projections and the dot plot were pretty negative last week. And overall, over the past month, ever since mid last year, they have been overestimating the future developments of the economic situation in the US, right? So, considering that they overestimate the future, and that the statement was extremely dovish, right? Market run to price in an even worse than expected picture. That's why we saw the greenback decline sharply on Thursday and Friday and ahead of the weekend, right? This new stance, sort of speaking, where the Fed officers are trying to say that, in fact, they are things are not that bad and that a rate hike is still in place. I don't know how to take it, but it surely will help the greenback to recover some ground. I do believe that what we are seeing in the market are strong corrective movements. I have nothing saying me that the dollar is poised to recover its bullish momentum and return to highs. In fact, by the end of last week, the currency has posted multi-month lows against most of its major rivals. And of course, we need to also consider the strength of the different currencies, right? We have a very weak pound, a very strong Aussie. So the effects, of course, will be different across the board. Sorry. And the other thing to consider is that today we have a really sad day with terrorist attacks in Belgium, and risk aversion has kicked hard at the beginning of the London opening. We have seen stocks plummeting. Stocks had recovered some ground, but both the dollar and the Japanese yen maintained most of their initial gains. I do believe that I'm seeing that gold is lagging, which is pretty relevant in a risk aversion environment because the commodity has been down ever since stopping around 12.85 last week. And maybe the commodity has finally reached a top and may correct even further lower. We are going to see from the technical point of view in a few. In the meantime, let's go check the macroeconomic calendar. I do believe there you're seeing it. We have just a lot of economic releases coming from Europe. In general, I was watching that the PMI's numbers were pretty encouraging in Europe, in Italy, in France, in Germany, and the Eurozone itself readings, right? With services, the services sector still leading the way, right? Manufacturing was barely in line with expectations in the Eurozone and below expectations in Germany, but the service sector keeps growing, and it's what's fueling growth in Europe and even in the UK lately, right? It's the only sector that is preventing the economies from collapsing. So I believe that will keep the euro relatively positive, right? We have the IFO survive really surprising to the upside, but I was just watching the SEO survive, which is far more relevant for me than the IFO one. Came out below expectations, and even the current situation analyzed is below the previous one. So things are not so bright in Germany, right? It was positive for the US, however. Anyway, keep in mind that we have a shorter week with the Easter holidays, right? So there's going to be a lot of data out on Thursday. I don't believe that any of what we have scheduled for Wednesday will be really relevant for the currencies. I do believe that the main focus will shift now to retail sales in the UK and durable goods in the US. The previous readings have been revisited a bit higher already, but we're still in negative numbers. The latest reading has been for poor, to say the least, and that is another sign that manufacturing is shrinking in this case in America, and that will probably keep uh, uh, the fears about an economic levels slowdown as the main market driver. Okay, on Friday, the only country that will be actually having not having a holiday will be the US, and we are going to see the GDP figures, right? The second revision for the last quarter of 2015 figure. Let's see, it's the second revision. We have already had the first reading. So if it's in line with previous reading, it's probably going to give us little to work with in the Forex board because it usually has a very limited effect. Okay. Anyway, let me share with you my charts. Okay, there we are. And this is what I was telling you about, right? We have the euro and the pound plummeting alongside with the initial slump in stocks. This is a German DAX, just as a guide of the behavior in European indexes. And as you can see, it quickly erased all its opening losses. It trimmed losses, but none did the euro nor the pound, right? That remain weak. But take a look at the OC. Market is still buying the dips. OC is still among the strongest currencies of the board because of its self-strength and market sentiment. And if stocks keep rising, it will probably keep going higher in despite oil's decline. Okay, so be aware of that. Anyway, and from a technical general perspective, what I'm seeing in the euro is that the pair has retraced partially from from the highs in the 13-14 region, but I don't see a clear breakout lower. Take a look at the daily chart. We are far away, the 200, the 100, and even the 20 simple moving average. I do believe that the immediate support is the 1160 level, right? If we lose it, we can go down to 1120. That's a strong, really strong support region, and that is for me the line in the sand for the upcoming bullish trend. If we take out that levels, 1120, then the risk backs towards the downside with a huge 980 support around a huge support, sorry, around 980, and then the promo bearish target if we lost 111. To the upside and shorter term, we have an immediate resistance at 1240, 1250 right, in a year. And if we take it back, the price manages to go ahead above it, sorry, we can approach 113. Yet we need to clear that 113 to continue higher. I do believe up to 1371. It was 75. Yeah, 75, which was this February high. Okay, but it will depend on how we close the day today and how the durable orders and GDP figures come in the US later this week. Okay, with the shorter weeks and many markets on holidays on Friday, we may see the reaction in the market being delayed towards the Sunday opening in Asia. So try to not to leave open positions for the weekend if you can. Anyway, for the pound, we have tried once and twice and even a third time to rally beyond 61.8% retracement of this year decline, right? But the pair has been unable to advance beyond 145 and even retreat back below that Fibonacci resistance, which is huge for me. So the risk, it's mildly bearish at this point. I'm watching the pair price struggling with the 200 exponential moving average ever since it plummeted earlier today, right? We have a quickly bounce, but it can move away from the moving average. So I would like to see a clearer move before taking a certain positional bias. because in here we are seeing a battle, right? Bulls and bears, and there are no real definitions. If we take the daily low, which is 42.50, the pair can go down to 42 and even lower, 41.60 today, and we need to get back above this 43.20 region to deny the downside and see a recovery back to 44.10 today and earlier tomorrow, but seems the upside limit at the time being. And for the Aussie, as I was saying, I believe that buying the dips is still a good idea, right? Oh, we have been talking several weeks about the self-strength of the Aussie and the fact that Australian economy is doing pretty good. So not expecting, but not liking the selling side at this time, guys. Even despite that the pyramid broke lower on some dollar demand or risk aversion or whatever you want to call it, I don't like it. I would like to keep buying the pair, and I believe that the immediate resistance now is 76.30, right? That's the level I'm probably target right now. If the price manages to go beyond it in the upcoming hours, the pair can retest or approach back towards the 77 level, and we're still a few pips below it last week, but I do see scope for a test of 77 and even higher. In fact, I believe that we can go up to 80, right? And I do believe that Governor Stevens will begin to be a bit concerned if we rally much beyond the 80 level. So my take is that if we go up there, Governor Stevens will change the tone of the statements after the Reserve Bank of Australia meetings. And let's see if the market believes him, of course. But he sounded pretty confident lately. He's a usual hawk, so not really a surprise. What surprises is when he becomes dovish, and that's what may happen if the pair reaches 80 and tries to rally beyond. But up to 80 seems we are in a central bank comfort zone, so not much concerns from that side. Anyway, and for the short term, okay, we have a strong support around 75.30. Okay, I see several intraday highs and lows around the level, so I could expect that approaches to that level keep attracting my interest. Below it, we can go down to 74.70, right around there. But even though if a pair falls down to this level, I'm not seeing much of a downward potential. Honestly, to talk about a bearish continuation, we need to go past these lows around 74, okay? Anyway, and for the pound, I already saw it, and the dollar Japanese yen. What we have in here is a strong bearish momentum, a strong bearish trend going on. The fact is that the latest breakout lower due to panic selling has extended downward potential, the downward rally down to 1110.66, and I do believe that the risk remains towards downside as long as we remain below 112, which is where selling interest has been surging ever since. Not much of an upward potential, to be honest. Remember, we are in March, and in March is the end of the fiscal year in Japan, and despite the rule about repatriation has been changed like 4 or 5 years ago, the currency, the Japanese currency, tends to appreciate in March. So actually, I don't believe that buying this particular pair is a good business for the rest of this month, okay? Spikes or selling opportunities seem far more interesting than that. Anyway, and in the shorter term, if we take out 12, we can go up to 1250, 60 region, also strong static resistance level. And above that level, we can take it back to 13, where I do expect a strong selling interest to cap the rally, right? Right now, we have a not so clear support in the 1120 region. I would like to see the pair below 1110, to be honest, to take a bearish trade and looking for a retest of the lows and even lower levels. Take a look at stocks today, because if the bearish run resumes and panic comes back, and if US indexes open lower and fall, the pair may well break below that 111 region. And for what it's quite interesting is what's going on in gold. As I told you, I do believe that we have reached sort of a roof in here. Remember, we talked about this rounded floor and how it was developing. Well, now it seems that we are drawing the contrary figure, right? Still developing, not something confirmed, but the fact that today we have a really needed advance in spite of the ongoing risk sentiment makes me believe that we can correct lower in here. Keep in mind that the goal has been highly correlated to the Fed, as I always said. So if there's a chance that the Fed will raise rates sooner than September, which is what market is believing this day, the gold will probably suffer, right? And that's exactly what happened yesterday with Fed officials. They said that there is still room for rate hiking even in April, although no one believes that. I do believe it will be a shock. Can you imagine that? It will be a huge surprise, but if they actually do that, it will mean that they are still in the path for the 4 rate hikes they announced in December, and therefore the commodity may plunge. So be aware of that. Try to have no much longs in here ahead of any Fed meeting, or shorts for the case. Stay away from gold ahead of the Fed. Anyway, I was watching the charts at 12:25, okay, around there. We have a strong support level. Today we are recovering, and I believe we're still far away from that level. And that for me comes as the line in the sand for this bullish trend, right? Break below it will confirm the top, and will probably signal a 50-60 bucks decline in here in correction back to 11. Sorry, 1150, 1140 price zone. Okay, and what's another surprise is oil prices, right? Oil has broken above 200 simple moving average daily chart for the first time in centuries, I believe. And here we are consolidating above it with 20 simple moving average has crossed above the 101. That's usually a strong bullish signal, but I'm still not convinced of this rally. You know, guys, this keeps going higher, but I don't believe it will keep going higher if if oil producers don't come to an arrangement. They have delayed their meeting from March to April. We're still waiting that they decide on the output freeze. They say they will meet, they won't. It will be OPEC and non-OPEC, with or without Iran. There's a lot of noise coming on from there. We need, I do believe the market needs a clearer picture before going on higher. If Iran joins the deal, and the meeting is actually made, and actually decides on output freeze, that we can go back higher and keep rallying with a bit more of a fundamental base. But if they don't, I do believe that we are going to see a decline back towards 35 level pretty soon. Okay. I do believe that there's not much I can add today. Sorry, guys. I will stop sharing my charts. Anyway, okay, there we are. I do believe that's it for today. The most relevant stuff has been said. So see you back next week, and I will be live on Friday covering the US GDP release. So see you there. Okay, thank you and goodbye.